Greetings, neighbors. Welcome to the Perfect Sense podcast. I'm your host, Alex Becerra. Today, I am very excited. We will be engaging in an awesome discussion about understanding the path to home ownership. For today's discussion, I'm really excited because we're going to be featuring a subject matter expert, a friend of the show, someone who's been here before, our home loan manager, Casey Jenkins, here at Safe Credit Union. Casey, before we jump in, do you just want to tell our audience a little bit about who you are, what you do here at Safe, and maybe what you like to do in your free time?
Great. Yeah. Thank you so much, Alex. My name is Casey Jenkins, home loan manager here at Safe. I've worked here for 15 years, so I've put a lot of people into homes through the years, and looking forward to chatting a little bit about that. And I think for me, one of those real rewarding parts of the job is taking someone who maybe doesn't think that they can buy a home, walking them through the process, helping them with maybe credit, budget, and then ultimately having them get their keys to their new home.
Absolutely. I mean, what I find is in the work that I do, I'm always out in the community. I'm generally not in the office very much. I'm out engaging with folks either in their workplace or maybe it's students. And I think home ownership is always relevant, always topical. There's always people that sort of want to know what's going on in the housing market. If I wanted to purchase a house, where am I on that trajectory to being able to do so? And one thing that I've learned in all of the conversations that we've had before is that, to your point, one of the most fulfilling things about it is that every story is different, right? Like the logistics, signing documents, application, all those things can be very similar, but the actual story behind the person and whether it's an individual or a family to go from, again, wanting to become a homeowner all the way through that process, I would imagine is just really meaningful.
It is. I usually like to explain mortgage that it's really boring. It's a rate, it's a payment, it's a term, boring.
Yeah.
Right. But what's so interesting is each person's story is so unique. How they've made their money, how they've saved their money. Maybe they're getting a gift from grandpa, or they have just, scrimped and saved everything to be able to pull that down payment together. And so it's so fun to watch that process happen. And each person's story, like I said, is just so unique on their journey to home ownership.
One thing that I think is really important to just kind of highlight before we jump into this conversation is there are kind of stages where somebody might be in this path to home ownership. And I think for the most of our conversation today, we're going to focus on maybe people that are in that sort of like first time home buyer element. As far as the general public is concerned, I think there's a lot of sort of like uncertainty and misconceptions around like, what does it look like to become a homeowner? Like almost everybody knows a realtor or somebody
Sure.
that does real estate. But I think one thing that was really important for us to kind of shine a light on is that that's just one part of the overall path to like creating home ownership. And so for us at Safe, you're coming from the perspective of like the financing, the actual dollars, how we go from like looking at houses, maybe finding what we like, and then ultimately being in that house and, in a successful way, being able to manage whatever that loan is.
Right. I think a lot of times people see the mortgage process or home buying process is really intimidating.
Yeah.
There's so many things that I don't know. And I think it's really important to remember that mortgage itself is just a tool. It simply is a loan that the bank provides you for home ownership. So you don't have to save the entire amount of the home to be able to put the cash down on it, right? And so it allows you to get into that home ownership more quickly. Something we see right now is some people have been renting for so long, they have been paying their landlord's mortgage for years now, right?
Yeah.
So you take a simple example of someone who's paying $2,000 a month for rent, let's say. So over the course of the year, that's $24,000. So in a matter of 4 years, you've paid nearly $100,000 of your landlord's mortgage,
Yeah.
where you could have been building your own equity. And that's something that I love to see people make that transition away from being a renter to building their own equity and their own increase of their net worth.
Now, regardless of where somebody's, demographic is, their age, maybe what their income level is, let's just sort of start with a 30,000-foot view.
Hmm.
If somebody is considering purchasing a home, they're a first-time home buyer, what are some of the biggest major considerations you would encourage them to sort of explore?
Yeah, I always think that, again, everyone's position is so unique in life, how they've made their money, how they've saved, maybe what they haven't saved yet. So sitting down with a mortgage advisor, so it's safe. We have a number of great home loan consultants that can help you with this. But what's great about that is sitting down and seeing what your current situation is. I always think it's so important to get the facts in front of you first.
Yeah.
I had some real close friends of mine. They thought that they're never going to own a home. And they're like, Casey, we have the worst credit you've ever seen. Right. And so I was like, well, let's just pull your credit. Let's, complete the application and let's see where you're at. So sure enough, they had a 726 credit score, which is pretty good in the whole scope of life. But they had some high balances and they had one payment on their credit card that had gone just past the 30-day window of time to
Yeah.
make the payment. So they just knew it was the worst credit ever. And so sure enough, we were able to get them into a home about another 30, maybe 45 days later, which they thought they were years away. And
Yeah.
so by simply getting the facts in front of you, I think is the very first step of where's your credit at? What have you saved? Where is your debt to income ratio? Those are really the big characteristics of how you qualify.
One thing that I talk about a lot when we have these sort of like goal setting conversations is the more specific you can be, the more opportunity you have to be successful when you're going to achieve some sort of goal. As it relates to home ownership, I think even if somebody is in a position where maybe they are ready to buy a house, it may be worth exploring to them like, does it make sense to take a little bit extra time to improve my credit score or contribute more to my savings so that once I finally sign those loan docs, I'm in the best winning position for my situation? Um, would you speak to that a little bit?
Sure. Yeah, so I think a lot of times we see people sit down with us and they have their own plan that they've had in place, which I think it's great to do your own planning. But sometimes having an advisor help you and kind of direct your plan to tweak it a little bit along the way is extremely important. So, for example, we've had a number of situations where people have been saying that they want to pay down all their debt before they buy a home, which I think on the surface that sounds good. The problem is many times they've liquidated their savings in
Mm.
an effort to do that, and now they don't have any down payment money. Where many times they're able to buy the house with the down payment money and then work on paying their debt down as they proceed forward. Because you're going to have a housing expense regardless. It's either going to be rent or it's going to be mortgage.
Mhm.
So let's go ahead and evaluate that to see what makes more sense of paying down the debt prior, or maybe keeping those reserves and using that for down payment.
Totally. And you shine a light on something that's really important. And again, as we're out having interactions with our community members, these are things we kind of ask them like, what is your biggest concern around the home buying process? And so for some people, it's like, I'm afraid my credit's not good enough.
Mm,
For other people, it's like, well, I might have decent credit, but I'm not sure I have the savings or the cash on hand to cover closing costs and my down payment, right? So there is like a spectrum of things that we sort of need to look at, and especially your team as home loan consultants to really, again, ensure that each individual member gets that personal touch and they can rest assured that through that interaction, that relationship with our home loan consultant, we are setting them up to build financial freedom, not
right.
just in the immediate term, but in the long term.
Yeah, and I think when it comes to credit, just the general advice is pay your bills on time and try to keep your balances down. I think a lot of times we make finances so complicated, and I need to be perfect in my finances to get to that next step. But one of the things for me, I always like to use for with my kids to mortgage advice to my own life is, don't let perfection stop your, progression in life. And I think
Absolutely.
that's so important that people think they need their finance to be perfect before they go and apply. And I would say just the opposite. Let's sit down, let's discuss that plan, put it together, and let's get that next step of progression.
Yeah, and I would hope that people don't discount the value of having a subject matter expert on your team. Because for those folks in the general public, it's not every day that you're buying a house. But for our mortgage experts, this is what they're doing day in and day out. And they've seen a range of different experiences and they're able to tell different stories about how they've kind of worked with members through that success story. So I think when people can kind of, it's great to be able to be empowered and do a lot of things on your own. But if you have areas or blind spots where you're like, I need to know a little bit more before I make the next decision, rely on those folks that are in your community that again, have that level of expertise and experience to speak to
Right.
so they can tailor
Right.
fit the right
Yeah, and
solution for what you need.
transitioning to mortgage products a little bit, I
Yeah.
think there's a lot of confusion around what's right for me and so on. And people have that idea of what is the right product for my situation. And again, I think that's uncovered by sitting down and kind of hashing that out and
Mhm.
talking about, life goals and, what is that timetable that I'm going to live in the house. And I think too, one of the other common questions that we get is, should I do a 30-year fixed or should I do a government loan or should I do an ARM product? All those questions kind of come to light throughout our discussion. And I think for me, I like to have that time horizon discussion.
Mm.
Like, how long are you going to be in this house? And a lot of times that really is a deciding factor of which product is right for them. And so I think there can be a lot of confusion around mortgage products. So for you, like when you look to buy your house, were you thinking about having stability or flexibility? What was kind of a deciding factor for you?
To the storytelling piece, I feel
Mhm.
like my experience was quite unique
Mhm.
because, like, when I purchased my home, I wouldn't say it was like the main thing I was working towards was becoming a homeowner, but the universe sort of aligned itself in a way where my grandmother had passed away.
Mm.
And so I've spent most of my life growing up and even as an adult in Placer County. So when my grandma passed away and my mom was sort of dealing with probate and all these sort of
Mhm.
like kind of sticky situation, she approached me about, I think you may be able to purchase your grandmother's home. And I
Mhm.
was not that confident that it would actually be something I could pull off.
Yeah.
But what was great was at that point, it really did start a conversation. And again, I'm a safe employee at the time. So
Right.
I went to my home loan consultant that was in my branch and I was like, hey, help me understand this a little bit better. And through that process, like before we knew it, we were getting ready to sign loan docs and do the application and do all that sort of stuff. So I felt
Nice.
really supported
Nice.
throughout that. But yeah, I think it was one of those things where like stability was important, but
Mhm.
also I can't put a price on living in the house that my grandmother
Mm.
practically raised me in. Like
Yeah.
outside of the house that I grew up in, that was probably where I spent the second most amount of time. So
Mm.
the fact that now, 7 years later, I've got a 5 and a 6 year old living in that house.
Mm.
These are sort of like the intangible values that I
Sure.
get out of living there. Now, granted, I've had to put some work in. I'm
Right.
still doing work on the house, but there's certain things you can't necessarily put a price tag on.
Yeah. So, in your situation, having that stability, maybe the 30-year fixed would be the right situation for you because this is a home that's going to stay in your family for years to come. Where I think a lot of times that makes sense. And some people need that stability or the 30-year fix because they're not going to sleep at night if there's, a potential of a rate adjustment, 10 years down the road, right? That is just not even on the table. I'm not going to sleep. Whereas other people, let's say this was just a home that was a stepping stone home for you. You knew that you guys were going to have kids in the future and this house is way too small. We're going to need a bigger house in the
Mhm.
future as our family grows. I think a lot of times in that situation, an adjustable rate or a fixed rate for a portion of the time makes a lot of sense because you knew you're not going to be here in forever. And the home isn't necessarily going to stay in your family forever, and you're able to save money along the way. We just had a situation this last week where a member was deciding between a 30-year fixed and a 7-year ARM product where it's fixed for 7 years and then turns adjustable. It would save that member about $163 a month. And in the time that they're going to be in this house, if they made the 30-year payment, but did the 7-year ARM, so basically made an extra $163 principal payment, throughout that window of time they're going to be in the house, would have dropped their principal balance by $20,000. So when they go to sell the home, that's an extra 20 grand in their pocket by the same payment per month. So depending on the person's situation, it really depends on number one, that stability or flexibility on what's the right product for them.
Yeah, and I think, like, when we talk about building financial freedom, like, that's another big aspect, like, some people are just naturally more nomadic, right? They may not wanna live in the same area, or maybe they have a different vision of what things might look like 5 or 10 years in the future, and I think there's still value in home ownership because to your point, like, you can build equity and you can
Right.
essentially, if assuming the house appreciates, which happens in most cases,
Mhm.
sell the home, Now you're even further ahead than where you were before.
Right.
And when you get to that next evolution,
Mhm.
you might even be more comfortable than you were the first time. So
It's true.
now, you did mention a few different sort of like product types. Just for general knowledge of our listeners, would you mind giving us sort of a magnifying glass on maybe like the difference between a conventional loan versus an FHA versus like VA loans?
Right. Yeah, absolutely. So, first of all, I would say conventional loans are by far and away the most popular product out here in our market. It makes up anywhere from about 60 to 65% of the monthly volume of loan closings. And VA and FHA make up about another 15%, and then cash buyers and other kind of random products outside of that. So conventional loan is by far the most popular. And a couple of the benefits of it is that if you're going to put less than 20% down on the home, you're going to pay mortgage insurance as part of it. And mortgage insurance is just simply a way that banks manage risk and charge you a little bit more for an insurance product to give you the benefit of buying a home earlier than having to save
Yeah.
20%. So what's great about it though is when you get to 20% or more of equity in your home, that mortgage insurance payment goes away.
Mhm.
Where FHA is a great product, you only have to put 3.5% down, but the mortgage insurance is going to stay with you for the life of the loan.
Mm.
So that's something that's not going to fall off. So I think that's a big reason why people choose conventional financing over FHA. Now, I'll say FHA has a little bit looser guidelines when it comes to credit issues. So
Mm.
they'll go a little bit lower on the credit score threshold than, say, a conventional loan will. But again, it makes up a portion of the overall volume, but conventional still far and away is the big dog out there.
Yeah.
And then VA is great for our veterans. What's great about it is 100% financing, and there's no mortgage insurance on that.
What?
So it's a huge benefit for our veterans out there to be able to experience home ownership and be able to do that with little money out of their pocket.
Let's talk a little bit more about the process.
Sure.
When somebody's saying, "Hey, I want to purchase a home," they may be kind of examining the market, this, that, or the other thing, but there are certain considerations for, again, them individually as to what that ultimate mortgage payment might look like. So, what are the factors that are going to impact, like, ultimately the interest rate that they're approved
Mhm.
for, their monthly costs? What are sort of the main factors people want to look at before they start that loan application process?
Yeah, so I think there's a couple ways to look at it of stages, right? So you have pre-qualification and then pre-approval. So to get into pre-qualification, that's where you would chat with your home loan consultant about, okay, I make about this and I have about this saved. I can afford this in terms of what I'm comfortable with. And so that would be a pre-qualification of what's doable,
Yeah.
right? Just based upon what you've told me, kind of back of the napkin math, you can get into what makes sense for you. So that'd be a pre-qualification as you're sitting down with your home loan consultant. A pre-approval now is where we would actually get all of your financials. So we're pulling credit. We are looking at your pay stubs, your tax returns, maybe your bank statements to see what savings that you have, and kind of understand that a little bit more in depth of the actual details. And then we send that over to our underwriting team for the underwriter to issue a pre-approval letter. So as you can imagine, as a seller, they're going to be much more interested in a pre-approval letter than a pre-qualification, because you go from, this is doable to like, hey, you look pretty strong and we
Yeah.
have this letter, right, from an actual underwriter who's reviewed your finances. But when what the underwriters look at in kind of that pre-qualification to pre-approval process, we're looking at your credit. So, is there a number of late payments? What's your balance to limit ratio on your credit cards? And all of those factors kind of go into your credit score. So, that is one factor is credit. The other item is your debt to income ratio. So, what we look at as lenders is your gross income. So, before taxes are taken out, compared to your overall debt picture. So we look at what's on your credit report. So we don't look at things that aren't on your credit report, like your PG&E bill or
Yeah.
your Comcast bill. We don't look at any of those things. But what we do look at are things like your credit cards, your student loan payments, your auto loan payments, and then if you have any of the existing mortgages, let's just say. So all those factors get calculated up and we compare that. So just for simple numbers, someone that makes say $10,000 a month, they could have a total of mortgage payments and all those other things of let's call it 4,500 a month could be an outflow. That would be a 45% debt to income ratio. The final item that we also look at is your savings for down payment, right? So we have to have reserves as well too. So for a conventional loan, for example, the minimum down is 3%. So let's say you're buying that $500,000 house. So you would need to come up with at least $15,000 of your own money to be able to do that. So how do you do that? I think that's one of the biggest stumbling blocks for people in our current environment is they just don't have the savings that they did even just a few years ago. So we're seeing a lot of situations, kind of like yours, of family situations where maybe a grandparent or parent is giving a gift of equity of an existing property, or maybe they're just simply giving a cash gift, right? So still, it's got to be trackable, but something where a family is giving a gift of funds to help with down payment. Or it could come from savings. We see some people taking a loan against their 401k or other investment vehicles to be able to do that as well. So anyway, there's a lot of different options in coming up with that down payment money. And I think one thing that's is also important to keep in mind when it comes to reserves is it's not just your down payment money you got to come up with. There's also going to be closing costs associated with the transaction as well. And those closing costs are going to be comprised of the title company is involved in the transaction. There's going to be inspection fees that you're going to have. You have lender fees that are associated with it. So generally, it's another 2 to 3%. We actually have a safe employee that's buying a home right now, and she kind of went from like, oh, I'm just kind of looking to getting this incredible deal. And part of what made that deal incredible is that the seller gave her $15,000 to help cover her closing costs.
Yeah.
So she not only was able to use that $15,000 to cover all the fees that were associated with the loan, but she also was able to buy the interest rate down even further than what the rate sheet said. So she just got this incredible deal to help. So she's only having to come up with her down payment money. All of her closing costs are covered by the seller.
Two quick
Yeah.
observations. I love how you talk about the pre-approval and how that can be so valuable for a potential seller when
Mm,
they're, because the fact of the matter is when it comes to housing demand,
mhm,
there are more folks that want to purchase homes than there are homes available.
mhm,
And so I've said that many a time when I'm interacting with folks in the community of like, this is why it's so important to have somebody in your corner and to help you understand this process, because if you are going to get that pre-approval letter, you want your application to go to the top.
mhm.
You want to be the most appealing to that seller so that you can capitalize on that deal. So like
Right.
making yourself look as good as possible, whether that does mean
Mhm.
taking the extra time to build up your credit score or looking at some of what you have in terms of your deposit reserves.
Right.
The other thing I really appreciate that you mentioned, and I feel like this has come up when I've had conversations with our home rewards real estate partners,
Mhm.
is the fact that there's not like a one size fits all of how people get access to those deposits. So,
Mhm.
to your point, like it's not necessarily uncommon for a seller to provide credits to the buyer. It all is kind of dependent on what the current climate is. But I think kind of expanding people's awareness that, like, okay, you might not have 15 grand just sitting in your savings account, but we can look at other avenues to put you in that position to be ready for the down payment plus the closing costs.
Yep. No, you're right on the money, and I think being prepared is absolutely and getting those facts in front of you right out of the gate is so important because, yeah, like in her situation, if she hadn't done that prep work, she would not have been ready. And now, she has now got this incredible deal and is closing, I think, later this week now, as a matter of fact. So
Wow.
yeah, so pretty exciting.
That's awesome.
Hmm.
Now, you've already touched on this a little bit, but maybe we can expand a little bit further in terms of like when we're talking about that cash on hand,
Hmm.
what are the things, maybe like an itemized list of what people want to be considerate of? So you've got the down payment. What else do we want to factor in to have ready to go when that transaction is being fulfilled?
Yeah. So when you get into contract, let's say, for example, it's a 30-day contract. Usually you have in the first 10 days is your inspection time frame. So you need to be ready to go on what inspections you're going to do. And that might depend on the home that you buy. If it is a new construction, you might be doing fewer inspections because it's brand new,
Sure.
you know? Whereas if you're buying a home that's 100 years old, you're like, we need to do a roof inspection, a pest inspection. We need to go through all the
Yeah.
inspections to be able to make sure that this home is not going to fall apart next week. And so those are things that are so important. And so we definitely promote for your protection, get a home inspection, right?
Yeah.
Is one of the sayings in our world because there's so many things that us as a regular Joe, might not see in a home that a home inspector is trained to pick out. So maybe a dry rot or maybe some electrical issues, all those things that, we might not see with our own eye. That is so important. And you might still want to move forward to buying the home if there's an inspection issue with it. But now you at least have that knowledge that, okay, it's going to cost me X, Y, or Z to fix this
Yeah.
versus going into a blind and kind of sight unseen. I think it's so important to get those home inspections. So I would typically say a general home inspection, a roof inspection, pest inspection, things like those would be your must to do for most home buying situations.
Yeah. And then when we're doing the closing costs. So you mentioned title.
Hmm.
What other sort of like, I guess, fees or costs are people going to have when they get closer to the end of that transaction?
Great. So I usually like to break down the closing costs into 3 buckets for people. I think it's the simplest way to understand it. So first of all, the first bucket of fees is going to be your lender fees, right? So Safe, we charge $990 of our Safe lender fees, which industry-wide, that's pretty low. Most of our competitors out there are in the like $16 to about $2,000 for lender fees. So we're very competitive when it comes to that. So anyway, that's your first bucket is what does your lender charge you to do the loan on your behalf for you? The next bucket of fees is going to be your third party fees. So these are going to be all the other people that are part of the transaction. So, for example, the title company is involved. You have recording costs at the county. There's going to be a credit report fee, a tax service fee. So there's a number of like these little miscellaneous fees that are
Yeah.
out there that are just from other parties that are are needed throughout a real estate transaction to make sure that you have a clean title when you buy the house and there's not other liens on it that are going to come back and bite you. So all these are really important, but nonetheless they're part of the overall closing costs. So that's the second bucket is your third party costs. And then the final one is going to be your ongoing costs, which is your taxes and insurance.
Yep.
So many people get what's called an impound or an escrow account. And with that is where we collect a certain amount of fees up front. So it's kind of like a savings account. So as each month you make your payment into your escrow account, and then we pay that out when it's due, right? Versus you as a homeowner having like, oh my gosh, I just got hit with this, thousands of dollars of bill in November, right before Christmas, and whereas you're paying monthly into your escrow account, it's all taken care of for you. So while we're calling it a fee, it really is an ongoing cost of being a homeowner of
Sure.
taxes and insurance. So again, those are the 3 buckets. You have your lender fees, your third party fees, and then your taxes and insurance.
Yeah, that's great. And personally, I love having the escrow because I'll get that bill from the county and it's like, here's your tax bill for the year. But then I can rest assured it kind of notifies me in the corner, like this has also been sent to your mortgage company. They sort of do the math. They might adjust my mortgage payment slightly year over year. But usually no surprises. And it takes some of the thinking out of it for the end user. They're like, okay, I've got my
Mhm.
mortgage payment, and then as those taxes come in or your homeowner's insurance policies, we can just factor that in to our monthly payment, which is really convenient.
Yeah, and it's interesting, everyone has a little different feeling about it as a homeowner, and there are some options of some people want to pay it on their own.
Yeah,
They want that control. They want to put it in their own savings account to make sure that those monies are there and available. But then many people just want the simplicity. I just want to make my monthly mortgage payment and forget about
good to go.
any other bills out there.
Yeah,
Mhm.
awesome. Thank you for sharing all that.
Yeah.
One thing I briefly mentioned was our home rewards program, where we have partner real estate agents that help work, really create a team around a potential buyer. But can you tell us about some more ways that Safe Credit Union specifically supports their members through the home buying process?
Absolutely. I think one of the things that's unique about our process here is that we have local mortgage consultants. I think so much of our world is turning digital, and we're kind of losing that personal touch. And still to this day, the mortgage process is somewhat complex, and it's so unique, to each individual person. So I think having local people here is so important, first of all, so you can deal with us, over the internet, and message and text and all those things. But also, if you want to sit down with us, we're here for you as well. And all of our underwriters and processors are right here in Folsom as well. So if we get an appraisal back and that appraisal is on a property in Granite Bay, and maybe it has some comps from Orangevale, our team is going to understand the difference between Granite Bay and Orangevale versus that loan, being underwritten back in Minnesota somewhere, and they're not going to understand the nuances, in our community when it comes to the value of a home and things like that. So local presence, I would say, is extremely important around here. And then, yeah, with our home rewards program, to have vetted realtors that understand the market, are full time in the market. The market, has been difficult the last few years. So there's been a mass exodus of agents that have been, agents around here for a while. So there's also been a lot of changes in terms of documentation and commission structures and all of those things that has happened in the real estate world or side of the equation. So working with a home rewards agent that understands what's happening in the market, we have some great recommendations we can do. So it's an incredible program to take care of our members, give them this great benefit of a great realtor, but then also to be able to get some money back through the closing to be able to cover some closing costs is incredible.
Yeah, and I think one of the things that's also valuable, especially as it relates to like the home rewards real estate agents, is having somebody that does it full time, right? There's a lot of folks that may have a real estate license, but it's not their main thing that they do
Right.
day in and day out. And I think, especially again, with something that is so maybe sensitive as a mortgage can be, like it's kind of nice when you have somebody that has a reputation, they're well known, and I think that also helps occasionally when you're negotiating between the seller and the buyer, because you might have the listing agent on the seller side that already has an established relationship
Hmm.
with who's representing you on the buyer side, and I think that can go a long way as well.
You're absolutely right. There's been this kind of mass exodus of agents in the market, and some are still hanging on. So we kind of refer to those as the plumber by day, agent by night
Okay.
situation, right? And so you're just not able to stay up on market conditions like you would if you were in it full time. So I think it's really important to work with an agent that is in the market full time, and you're going to absolutely build a reputation for yourself one way or the other. If you're not responding timely, you're going to build a reputation for not being a great agent. So the listing agent may not accept that offer, right? Whereas if you've built a great reputation as an agent of where I respond quickly, I'm thoughtful in my responses, all of those kinds of just personal interaction, it's going to go a long way and be able to get your offer accepted as one of the buyers looking at to buying the house.
Absolutely. And I think it builds a lot of confidence for our members when they can rest assured that, like, yeah, this is a team effort. We want the best possible outcome for all parties involved.
Right.
And top priority is the buyer, the person who's going to become the homeowner. So I
Right.
think that builds confidence for them to know that, like, you've got people in your corner. They're here to represent you. They're here to see you through the process. And again, put you in a position where you feel comfortable with
Right.
the end outcome.
Right. And I think a lot of times people stop the process or maybe don't get started because they don't know where to begin. Or maybe they feel like they're not perfect yet. But again, don't let that perfection stop progress. Right. And so I just want to make sure that people really understand they don't need to feel like they have it all figured out to come and sit down and talk. We really want to be able to chat with them, help them put that plan together, and make sure it's right for them when they're ready.
Casey, it's been an absolute pleasure to have you here with me today. I feel really privileged because I feel like we get to interact a lot, but it's great to have you on the podcast, feature you in this new video format. And I'm wondering, are you ready for the lightning round?
I am ready for the lightning round. Let's
All
go.
right. 2 quick questions. The first one is, what is a financial goal that you're currently working towards?
Ooh, my financial goal I'm working on is paying my car off. I just bought a brand new truck, well, new to me truck here in December. So I'm pretty focused on getting that sucker paid down.
Nice. Excellent. That's so fun. I feel like I would love to have a pickup truck. Like that was my experience growing up, was my dad had a Chevy Silverado, and like so many memories were made in that truck. Ever since I've been working, I've had like just a little commuter car. We have our family car for like the kids and stuff, the nice, I guess, Kia Sorento or whatever. But yeah, that's something that's on my radar at some point in the future, is to get back to a pickup truck.
Yeah, for me, I grew up in Alaska, and so all we drove was pickup trucks up there. So yeah, it's great to be back in my stomping grounds in terms of vehicle.
Yeah. Okay. Question number 2. Do you have a local restaurant, business, cafe, etc. that you'd like to shout out on the podcast?
So I'm a big Zocalo's fan. They have an excellent fish taco, and you get the option of ordering 2 or 3, but order 3.
Nice. Excellent. Yeah. Where are their locations? There's one here in Folsom.
Yeah, so there's one in Folsom, Roseville, and then downtown Sacramento as well too.
So
I know,
no matter
all over.
where you're
There you
at
go.
in the greater Sacramento region, you're close to a Zocalo's. Awesome.
go.
That's a great shout out. Again, I appreciate you being here and taking the time to join us for today's conversation. And I look forward to doing this again at some point in the future.
Yeah, thank you so much for having me.
If you'd like to learn more about Safe products and services and how we can help you, visit our website at safecu.org and schedule an appointment with one of our professional experts today. Safe is federally insured by NCUA and is an equal housing opportunity lender. The purpose of this podcast is to educate and inform on topics surrounding financial well-being. This podcast does not constitute financial, tax, or legal advice and may not apply to your individual situation. You should consult with your own financial, tax, or legal advisor for specific information pertaining to your individual situation. The views and opinions expressed on this podcast are those of the participants expressing them and do not necessarily reflect those of Safe Credit Union or any of its officials.